Now, without further ado, I have the distinct honor of introducing someone who actually needs no introduction. Nonetheless, I will tell you some of his wonderful accomplishments. Born and raised in Windsor, which is about half an hour from here, and educated at the University of Toronto with a good liberal arts undergrad, I should note, based on the discussion from yesterday. In 1988, Paul Martin left a successful business career as owner and CEO of Canada Steamship Lines to enter public life. From 1993 to 2002, Mr. Martin became our finance minister. And in that role, of course, he led many of the changes in financial structure of the Canadian government, including the elimination of a $42 billion deficit. He also strengthened the regulations governing Canada's financial institutions, the impact of which we've been discussing over the last day and a half, as well as overseeing significant investments in education, research, and development. When financial crises erupted in Thailand in 1999, which erupted in Thailand, spread through Asia, the Americas, and Europe, Mr. Martin sat down with fellow Finance Minister Larry Summers to create the G20. In that first meeting was chaired by Canada and hosted by Germany. And in the year 2000, Mr. Martin hosted the second G20 meeting in Canada, and then again in 2001. The impact of Mr. Martin's global leadership cannot be understated, and he is respected internationally for his innovative leadership in working to forge a new global financial order. In 2003, Mr. Martin became our Prime Minister. During his tenure as Prime Minister, Mr. Martin's many achievements include setting in place a 10-year, $41 billion plan to improve healthcare and reduce wait times, signing agreements with the provinces and territories to establish a national early learning and childcare program, and creating a new financial deal for Canada's municipalities. Mr. Martin remains engaged both globally and in national issues, including co-chairing a poverty alleviation and sustainable development fund for the 10-nation Congo Basin rainforest. Domestically, he's leading the Martin Aboriginal Education Initiative and the Capital for Aboriginal Prosperity and Entrepreneurship Fund. There is, of course, no one more qualified than Mr. Martin to speak on the role of the G20 following the global financial meltdown, and we are absolutely thrilled that he has so generously accepted our invitation to speak at Couchiching. So please join me in giving a warm welcome to a great Canadian and a great global statesman, the former Prime Minister of Canada, the Right Honourable Paul Martin.
Well, thank you very much. Thank you all very much. Let me say that this is the second time that I have been here to speak at Couchiching. I spoke here 10 years ago during the period when we were formulating, in fact, the G20. I mentioned at that time that my father had spoken to Couchiching 4 times. So, yeah, you're going to get back to me, Gwen says, but you do it every 10 years. It's going to be 40 years before I'm going to be able to do anything. I thought that was, I missed most of yesterday, but I was there for the panel last night, which I thought was simply terrific. I want to thank the panelists, and I also want to say, just mention one other person who was here. Gwen said that I was going to speak to you for either 20 minutes or 40 minutes. It had been my intention to speak to you only for somewhat, 20 minutes. But Michael Wilson is here, and I think he's going to need 40 minutes listening to me. So I may go over. I just may go over. Now, oh dear. You've got to remember that for a long time, when Michael was the Minister of Finance, I would ask him questions in the House of Commons. So he is due to listen to me. I got to say that. I must say, on the other hand, that Michael Wilson answered questions in the House of Commons the way that Alex Helmfarb did yesterday. There was absolutely no information ever imparted. In any event, I have, as Gwen has just said, been asked to speak to you on the role of the G20. Now, given that the Couchiching experience is really primarily one of an exchange of views, in order to engender the widest range of discussion, what I would like to do is to essentially engage in a series of questions, a series of issues, all within the context of the G20. However, my perspective on this is pretty straightforward. The interdependence of nations today requires a global steering committee if globalization is to work, is to be made to work. And quite simply, that is the role that the G20 has assumed. And the question is, how should that role be exercised? And the reason that I want to put it in that way is I believe very much that the G20 is a work in progress. I think its evolution is going to be very important, and I don't think all of the questions have been decided, and I think that they have got to be debated. They've got to be debated at meetings like Couchiching, which is why I'm so glad to take this opportunity to speak to you. So I'd like to open our discussion by giving you 3 examples of how I see its role evolving, all of these within the context of the Korean summit, which, as you know, is going to be held in November, that is to say, in a couple of months. Now, the first issue that I would raise is that not every question, not every issue requires extensive negotiation at the leaders' table. But what is important are the signals that the G20 sends to the negotiating tables, whether they be the Doha round or the example that I would give, and the one that is by far the most imminent, is the whole question of climate change. Now, as you know, the wrong signals were clearly sent to Copenhagen. The Copenhagen meeting was not a success, no matter what kind of guise that you want to put around it. The next meeting, the follow-up to Copenhagen, is going to be in Mexico at the end of this year, not long after the Korean summit. It is a very important meeting. It is even more important now that the U.S. Congress has decided not to deal with climate change, and once again, the issue is very, very much in the air, not as to the substance of the issue, but our government's going to deal with it. Mexico is going to deal with the issue of climate change finance, specifically the promise to put up some $20 to $30 billion over the course of today, from today to the year 2012, in order to help the developing countries mitigate and adapt to climate change, with the conceivable promise of bringing the private sector in and governments over the course of the years from now to the year 2020 to spend some $100 billion a year, which is required for mitigation and adaptation. Now, whether that's going to happen or not, this thing works when I walk away.
Well, let's test it.
Well, no, but it's just that when the questions come, I want to be able to walk away and nobody hear me. What's going to happen over the course since Copenhagen? There was a meeting in Paris, and there was a meeting in Oslo, in Norway, at which point a group of countries came together, given the fiasco in Copenhagen, to see if what they would be able to do would be able to set the parameters for the climate change meeting that's going to be held in Mexico. And in fact, they had some success. It is absolutely essential that either at Korea or prior to Korea, that the G20 countries send the signal to Mexico that they want this money to be confirmed. Gwen mentioned in her introduction that I'm spending a lot of time in the Congo. I am co-chairing a major investment fund put up by the Norwegians and the Brits and the African Development Bank to protect the Congo Basin rainforest. It's the second largest in the world. It's made up of 10 countries, most of whom don't like each other, and the issue, but this is one of the poorest parts of Africa. Should be one of the richest, but as we all know, sometimes the curse of natural resources brings about poverty. But fundamentally, the purpose of this fund, it's about $250 million, is to be able to access the larger monies which are going to be required. I can tell you that if Mexico it does not succeed, then the ability of the developing world to adjust to really the climate change which is very much upon us is going to be very much at risk. And so that is this question of what the signals that the G20 can send to the tables where the issues will be debated becomes absolutely crucial. That's the first issue that I would raise with you. Second issue is the question of development or foreign aid. There are those among the G8 who claim that there is a division of duties between the G8 and the G20. There are those who say that the G20 should be limited to the economy and that issues such as development should be left to the G8. In my opinion, this is nonsense. It sounds a little bit like the argument for the abolition of the long-form census. First of all, in my opinion, development is an economic issue. You go see a farmer in a poor country, a farmer in Africa who doesn't have the seed to plant his crops, and tell him that development is not an economic issue, and I think that you'll be laughed out of the room, and you know that. The major donors of the world are at the present time are in the G8, but if anybody doesn't think that China, that Australia, Brazil, or Korea are not donors, they should look again. Fundamentally, there can be no issue that is off limits for the G20. The reason the G8 is no longer the World Steering Committee is because China, India, and Brazil is not at the G8 table. In short, in today's world, there is no issue where the views of the major emerging economies will not be important. And I think what we're really seeing is the difficulty that the West, primarily the European nations to be true, are having adjusting to what is clearly a change of economic power, a transition from West to East. In any event, Korea has settled the issue of development because Korea has put development on the agenda for the November meeting. And it certainly has the legitimacy to do so, for Korea is one of the very few nations to have made the transition from aid recipient to aid donor. And indeed, in that context, and in fact, in the context of the discussion of the debates that you had yesterday about the role, last night, about the role of the state, it will be very interesting to see if Korea advocates its model of development, which, as you know, is one of national champions working very closely with the government, heavily financed by the guaranteed by the government, which certainly worked for it. In other words, we have essentially said that in Africa, that, and Amin mentioned this last night, that the Washington Consensus is the essential form for development. I have not bought that, a number of us haven't, but that has been the basic position put forth by the IMF and to a lesser extent the World Bank. Well, as you know, what this really says is liberalization of markets, heavy dependence upon the private sector for economic growth. The Koreans have a very different model. And as the Asian countries, all of whom share one way or another that Korean model, we're going to see basically a clash, and it'll be very interesting to see how Africa comes out of this. My own opinion, in either way, they're going to come out of it well because the competition will benefit them. Now, there's one last point that I would raise on the issue of development. My greatest hope is that what the G20 will bring to this debate, as well as the other debates that it's going to be facing, is the ability to change the paradigm. The real problem, and Michael can talk to this because he went to, he was a G8 finance minister, G7 finance minister, long before I was, and has extensive experience. But the real problem, the G7 and the G8, is that essentially it has been one of a reaction to crisis. And I think that that's a paradigm that has to be changed. In other words, what I believe has to be done is that the G20 has to begin to anticipate crises, that they've got to be able to deal with them and hopefully either mitigate, and if not, mitigate, maybe even prevent, in certain cases, crises from arising. Now, somebody's going to say that's utopian. How, my God, can you anticipate a crisis? Nobody anticipated this one, the one that we're going through, the financial crisis. Well, I don't think that's true. I don't think anybody anticipated the extent of this one. I don't think anybody anticipated the nature of this particular crisis, but we all knew. I don't know, Michael, about you, but I lived through 5 financial crises as finance minister. Gwen mentioned the Asian crisis. I mean, they are, unfortunately, a regular part of the cycle. So you can anticipate them. And the one that I would really raise, the one that concerns me the most, is the issue of food security. The fact is that in 2008, as you know, there was a major food crisis. I was in Cameroon about a week after the major food riots broke out. And it was very clear when I was there that the degree of the problem that existed. It existed in Central of Africa, it exists in Bangladesh, in the Philippines. There were riots that all broke out. And essentially what happened was that as a result of the financial crisis, the price of the food was driven up substantially. These countries didn't have the credit to buy it, and all of a sudden it showed up on people's supper tables. And so, but I find it impossible for us to believe that we cannot understand that if you have a population, which is the global population growing by 3 billion, probably 80% of them in the poorest parts of the world, which are currently not self-sufficient in food, that as that population increases and as the emerging economies, places like China, begin to take more and more of this food, of the food space that is out there, that there is not going to be another food crisis. There is a famine going on in West Africa today. And only 2 days ago, Russia announced that it, in fact, was going to freeze the exports of grain. Well, for God's sake, that means the Ukraine is going to freeze the exports of grain. That means the prices of wheat are going to go up. The prices of protein are going to go up. It means the prices of foodstuffs are going to go up. And Bangladesh and Egypt are going to be seeking the credits. They're not going to have the money in order to buy that food. And I can tell you it is going to wreak havoc in Africa. Now, let's hope that we get through this current, what is not yet a crisis, this current problem. There is no doubt that there is going to be a food crisis. That rising population means it. And it is certainly not beyond the wit of humanity to be able to set in place the structural changes that will allow countries or continents like Africa to basically become self-sufficient and again a major exporter. We have seen what we've been able to do. If we're producing excess over here and they're suffering from a deficit over there, surely to God that is not a problem that cannot be solved. And I would really hope that the G20 can begin to anticipate and deal with these crises, and they will if, in fact, we put enough pressure on the member governments. Now, the last example of what I think the G20 must do in order to make globalization work, which I hope fits within what the panelists who are going to follow me are going to talk about. But if it doesn't, don't worry. The third example arises out of the current financial crisis, which, as you are all aware, the major aspect of that crisis is the banking crisis, which caused an economic downturn to mutate into a perfect storm. Now, banking crises are always the worst. They're worst because they inevitably become a crisis of trust, question of trust. An example, in the last 20 years, there have been 2 major bubbles in the United States. One of them was the dot-com bubble, burst. Now, you think about it, this is the new economy. This should have been a catastrophe. It wasn't. Basically, the economy, the system simply rolled on through as if it, well, you know, a slight blip, but not much more. But the banking crisis became a global catastrophe. And that really, I think, demonstrates the fundamental difference. Why? Because a banking crisis, more than anything else, is a crisis of confidence. That's what happened a decade ago during the Asian crisis. And that's what led to the creation, as Gwen said, of the G20 finance ministers. A crisis of confidence. That's what happened in 2007, 2008, which led to the Washington summit, that is to say, the creation of the G20 at the leaders level. And you know, you talk here about watershed moments. Well, I do believe the crisis was a watershed moment. And I think that if, in fact, the answer to that crisis is greater cooperation among the major nations of the world, which is what the G20 is all about, then, in fact, it will not be a wasted opportunity. But if, in fact, the G20 is allowed to simply drift along and not come to grips with these issues, then I think it will be a wasted opportunity, and that's why I'm so glad to talk to you today. It's also why dealing with the consequences of bank contagion, which is what today's mess is all about, must be at the center of the Korean summit. The fact is it has to deal with it. Too much water has already gone under the bridge. As the world struggles to find the means to prevent further bank crises, there are a number of issues, a number of solutions which are being debated. They have to be brought to ground. And let me simply deal with three of the more important ones. In fact, I think the most important. First is the concept of too big to fail. In terms of financial institution, that's water. Well, it's Ontario, I suppose, what the heck. I'm from Quebec. The concept of too big to fail. I very much agree with the position that was taken by the governor of the Bank of England, Mervyn King, in which he said, if a bank is too big to fail, it is too big. And I think that the real question is not so much how are you going to break the banks up. I don't think that we're going to do that. I think we've got to recognize that as a result of the crisis, the situation is actually much worse. I mean, what happened with all the failing banks is they were taken over by the stronger banks, and of course we've now got even larger institutions than we did prior to the crisis. But what has to be done is they're going to have to segment the individual businesses of these multi-business banks, segment them, have them separately regulated, but segment them so that if in fact any one of them gets into trouble, in fact they can be hived off, closed down, sold, or whatever has to be done. The second response to the crisis, which is probably the most important, is the need to strengthen bank capital. That is to say, dealing with the issue of inadequate equity, inadequate liquidity, and excessive leverage. Look, the situation is pretty clear. You all understand it yourself. If you go to the bank and you borrow money, the bank is going to insist that you put up a certain amount of collateral, and they're going to limit the amount that you can borrow. Well, the real question is the European and U.S. banks didn't do that. They basically had inadequate collateral, and they borrowed at a ratio of anywhere from 30 to 40 to 1. And fundamentally, that is simply not sustainable. And I think that this is an issue. This is an issue that the Basel Committee, as you know, is the committee of central bankers and regulators, which fundamentally, ever since the Asian crisis, has been dealing with this. It's been for a decade, and they've been doing it on a concentrated basis for a year and a half. And my own belief is that it should have been dealt with at the Toronto G20 summit, but it was not, because the Basel Committee was not ready. Well, it's now finally made its recommendations. These are recommendations in terms of increasing mandatory bank capital. Surprise, surprise. The major European and U.S. banks, which essentially said that they would accept what the Basel Committee reported on, but that they were going to require lengthy transition periods and got those lengthy transition periods, are now saying that they have to weaken the recommendations, that in fact those recommendations are too stiff in terms of bank capital. The foreign banks, and I got to make it very clear that we are talking not about Canadian banks, we're talking about the foreign banks. The foreign banks are saying that this will freeze lending. Well, that is nuts. The Basel Committee's recommendations are very close to what we now have in Canada. And the fact is they are not going to freeze lending. They're not going to freeze lending, and while there must be a transition period, I think that should happen. But quite simply, the G20, this is the time when the political leaders have got to stand forth. The technicians have had their discussion. It's over. The G20 has got to resist the pressure to weaken the Basel Committee's recommendations. And they have to resolve the issue at the Korean summit before the memories of the crisis fade. This is not simply a question of a microeconomic issue dealing with the banks. The fact is that there are countries around the world. Just take a look at what they have done in Great Britain in terms of austerity and deficit cutting. There are countries around the world who are now dealing with the specters of huge deficits. And those countries cannot afford another bank upheaval over the course of the next 5 years. And we all know what's going on in Europe at the present time. The fact is that the Greek crisis is essentially a bank crisis because there are German and French and other banks in Europe who are holding an enormous amount of sovereign debt. And the stress tests in Europe that just came forth that said we're going to determine whether these European banks are in good shape totally ignored the question of whether in fact sovereign debt was going to be good or not. We cannot afford another bank crisis. Korea has to deal with this issue. Now, in summary, Adequate reserves of capital may not be the only answer, but in my opinion, it is an absolutely necessary part of the equation. It is the essential part. And the reason is that it is the answer to banks taking excessive risks to earn excessive profits, and then asking the rest of the world to bear the cost of failure. But that being said, there is one more issue that I would raise with you in terms of what has to be done by the G20, because don't forget, it was the bank crisis that brought the G20 into being at the leaders' level. And that is, while we all accept that a single global regulator would be unworkable. This was originally recommended by the President of France, Mr. Sarkozy, but I think there's now been a recognition that banks have got to be regulated at the national level. But having said that, there are huge gaps in the global system. And what is required is an international body to monitor systemic risk throughout the world so that a banking failure in one country doesn't cause a banking failure in another, to monitor systemic risk across borders, and to prevent regulatory capture. Now, I don't want to go into mind-numbing detail, but I'm going to. But just because I think it is so important to talk about these issues. I'm saying that we've got to set up an international body that is essentially going to regulate the regulators. And the reason is that what happens, and it's what really happened in the United States, I think, and partially in Europe, but certainly in the United States, is that there's a thing called regulatory capture, that the regulators become captured by the industries within which they are. And I believe that what you have to do is have an international body that will monitor the regulators to prevent this kind of regulatory capture. And I think the way to do this is twofold. One, it's going to involve peer review, which is to say, for the sake of discussion, that 3 countries would be named. I don't care. You know, France, Thailand, and Korea would monitor the regulatory system in Canada, and then Canada and 2 other countries would monitor the one in the United States. In order to have, and I've got to say that this peer review has to be done by regulators. Those of you who are graduates in economics, a couple of you asked questions yesterday, you will forgive me for saying this, but we really do not need a fresh-faced graduate from Harvard. What we really need is a miserable, mean regulator, somebody with a lot of experience who's going to come in and do this kind of thing. The second thing. Well, I didn't graduate in economics. That's why I became finance minister. The second thing that we need is the mandatory enforcement of rules. Now here, let me tell you, this mandatory enforcement of rules, I think I am in a minority. I've had the opportunity, and I'm sure Michael has, to talk to the various players, and I'm not sure everybody would agree with me on this, but let me explain to you my position. What the Basel Committee is recommending is that the international standards be set, that we do the peer review, and then that the peer review would essentially come across a country that was violating the rules, whose regulations didn't live up to the international standards. And then what they would do is they would publish that. This is what the IMF does. They would publish it, publicly shaming the countries which don't live up to the rules. My own belief is that public shaming of a country doesn't work. First of all, you can't shame most of the major powers. But we'll just take a look at this. Again, let me just take a look at Canada's situation. We had panel after panel decide or come to the conclusion that on softwood lumber, the Americans were wrong. We won the battle, Americans ignored us. We won the battle the next time, Americans ignored us. And they went on and on and on. And I know, I'm sure Michael did, and I know that I did, talk to the Americans about it all the time. They just paid no attention. You cannot shame a major power. And so the only way in which you're going to deal with this is if you're going to have an enforcement mechanism. And I won't take the time now, but if you want to in the question period discuss it, there are enforcement mechanisms. None of them are going to be very acceptable. But I can tell you, we cannot continue in the kind of world in which we live now unless we recognize that capital operates without borders. and we are going to have a regulation process that operates without borders. Now, in fact, the body to do this has been created. It's called the Financial Stability Board. However, its authority has not been determined. It's clearly understaffed, and most countries don't belong to it. And so I also believe that at the Korean summit, this is another issue that is going to have to be decided. Now this, by the way, also determines something else that I think that the G20 can do. I think it demonstrates that what it can do is infuse existing international bodies with a great deal of authority. And it can also do it in a way that actually brings Asia into their proper position in the whole scheme of things. The Financial Stability Board was originally set up by the G7 finance ministers at the time we set up the G20. It was called the Financial Stability Forum. The problem was that, and it was a recommendation, I'm not quite sure of the country, but the country that confirmed it and brought it to the G7 was Germany. At the time that it was done, Canada argued very strongly that it had to be given a staff. It was not. We argued that it had to be given authority. It was not. And we argued very strongly that it should be given the same membership as the G20. And the G7 ministers basically said to me, you got the G20, you've got enough. We're not going to include the Financial Stability Forum, which is a body designed to oversee the banks and central banks and how they're dealing with their banks. We will not increase it beyond the G7 except for a couple of European countries. This was an incredibly Eurocentric thing. They would not bring Asia in. Made absolutely no sense. Here you've got these major emerging economies, but they wouldn't bring it in. Now, when the Financial Stability Board, which was the successor, was created, the Asian countries said that they simply would not play unless they were part of it. So now the Financial Stability Board is composed of some 22 countries, I think, a couple of over the size of the G20. But there's another interesting phenomenon. And it shows you the problem the world has cooperating. The G20 is now saying we don't want, with all the Asian nations, we don't want the Financial Stability Board to include the other 165 nations of the IMF. And it's not going to work unless that's done. The G20 is up here. It is not a dictatorial body. The G20 is a body that, because of the weight of its members, can set the direction. But it's got to recognize that its legitimacy depends upon its ability to draw upon the wider world. So I think it's going to be a very interesting debate. The other thing that the G20 has done is it's given the IMF new life, and we can get into that in another discussion, but that's a very important thing. I think I'm going over time, and I think Michael understands. And so I'm going to close with one final point. Can you hear me eating ice? I'm sorry, but it's really good. I said at the beginning of my remarks that the interdependence of nations across the broad spectrum of issues, climate change, poverty, banking system, whatever you want, means that good global governance requires a global steering committee. I believe that's why this is a watershed moment. But that being said, there is one essential element. I've discussed this with John Curt and Madeleine Koch, who are here, and a number of people ad nauseum. There is one essential element that the new steering committee requires if it is going to succeed. And that is, to make globalization work, the leaders are going to have to be able to rise above the political comfort of narrow nationalism. Margaret Macmillan yesterday, in her remarks, I'm told, went back and spoke about the Treaty of Westphalia in 1648. I think that one can argue pretty strongly that that's when the modern era began. In the Treaty of Westphalia really came the first definition of sovereignty, the sovereignty of nations. It was a definition that was limited essentially to rights. It is my belief that that definition has to be extended now to include duties and the responsibility of nations to each other. The example I could give you right now, going back to the banking crisis. The lack of sound European and American bank regulation over the course of the last decade led to a recession which infringe the sovereignty of every country in the world. And I'm sure you've all heard the example that has been given about the guy goes to buy a house in California. He can't afford it. He has no down payment. He hasn't got any income. But he, in fact, buys a house because it is financed with a subprime mortgage. Those subprime mortgages are then packaged up, and they are sold in small municipalities in Norway, buy them, and go broke. That's the world in which we live. I have been to one of those small communities in northern Norway that bought them. I know I actually been there, and there's no way that that small community had any right buying subprime mortgages. What did they do? They relied upon the fact that the Americans had decent bank regulation, that the Europeans had decent bank regulation, and they didn't. Well, the Americans and the European bank regulators owed a duty not only to their own populations, but to the rest of us to properly regulate their banks. And they failed in that duty. Despite this, legislatures in the United States, in Congress, in Germany, are still fretting about the fact that global coordination is going to infringe on their sovereignty. Well, the truth is, given the interdependence of nations, establishing international norms, establishing international standards is the only way now of protecting national sovereignty. And if the West doesn't understand this today, it is going to do it tomorrow. The fact is that the two largest banks in the world are Chinese. Many of the fastest growing banks in the world right now are in emerging economies. And a great number of those banks are undercapitalized. The fact that the situation of the Chinese banks is well known. It's written about every single day, that having made loans to state-owned companies to basically have financed a property bubble of their own, that they've got the same problem. Well, now it's isolated to China. That's fine. But just think, what's going to happen if in 5 years from now, as those Chinese and the Indian and Brazilian economies grow and continue to penetrate our economies as we have penetrated theirs? What's going to happen if there's a bank failure, a major bank failure in China or India or Brazil? Well, I will tell you, there will not be a stimulus package big enough to restart our economies. Our economies are hopefully getting going because of the increase in the price of commodities because of China. But as our economies become more and more interrelated, as we become more and more dependent upon them, the answer that we're finding in this particular one and we're having difficulty with is going to be much more difficult. And what that means that given this, the time to resolve these potential threats are now when we have the opportunity to do so. I mentioned earlier, 10 years ago, that I spoke here at Couchiching. It was during the Asian crisis, and I was just formulating the G20 finance ministers. But we had not announced it. And you'll mind, I'm going to just read something that I said here at Couchiching. You said you were here, Gwen. But I mentioned to you, you didn't remember. You didn't listen to me. Let me just read what I said 10 years ago. I'm going to actually read it because 10 years ago, you remember this, Michael, at a party. No, yeah, no, I do know. It's just that 10 years ago, there were speechwriters in the Department of Finance who wrote my speeches, and they write a heck of a lot better, and I have to write my own. So the problem is that this is talking about the Asian crisis. The combination of imprudent domestic banking practices, together with globalization, ensures that in each and every case, the fallout is felt not just in the country of cause, but around the world as well. So where does the solution lie? Even the most libertarian among us has long since acknowledged the need for banking regulation to protect us from the excesses of an unfettered market. Given that these tools are welcomed, and they certainly are in Canada and in most countries within our borders, by what logic would we not seek their development beyond those borders? Now, the question that I would put to you, I put 10 years ago, and I still think it's valid, is why would we build an international model that has all the market freedoms of our national economies, but none of its protections? That's the issue in terms of the financial crisis that the G20 has to answer. But it's true not only in terms of bank regulation. It's true, albeit far too late, in terms of climate change, in terms of famine, in terms of global poverty, in terms of all of the issues that we face, all the issues that transcend our borders, because the threat of contagion in each of these areas is universal. It knows no exceptions. And as a result, I believe that the recasting of sovereignty to include its duties maybe the most important role the G20 can play, and that's why I said I think it is a watershed. And it won't be easy, but clearly it is the key to making globalization work. And I hope that we can discuss this as well in the period that's going to follow. Thank you very much. All right, I'll go down there now.